Has the euro dollar bottomed out? That's the question I'm quite often getting at the moment. Are we seeing a bottom put into this euro? Well, there could be reasoning behind so, and what I'm going to do in this video is explore both, I guess, the pros and cons. Firstly, technically, we have a bit of support from the quarterly pivots right down into its S2 at the moment. It has broken them fractionally, but it's closing above, and at the moment it might suggest there's a bit of support from that point of view. However, of course, when we look at the technicals, we always look at historicals, and I'm just going to go back to the quarterlies here and see where it's been before, and there was some support a bit higher around that 97-ish area, and then we've got this whole level of support of when it very first started being a single currency and being used, and well, there was the calls at that time for parity. Well, sure enough, it hit parity. Sometime afterwards it's come back to it obviously, and it's taken quite a while. Anyway, the question is this bottoming out? It could well be. Now, there are some reasonings to why it might be. We can see here it's made the low here, it's made another low here. This sort of pattern always gives some form of divergence depending on what indicator you're using. It certainly has on the RSI here, and maybe the MACD as well. We just about on the MACD as well. On the my MACD is set on a much slower speed, but there's certainly potential for it to have closed out or bottomed, at least for the moment. Now the big question, of course, then is, well, is it going to break up? And that is really, this is the point of, if it's going to turn, it's going to be breaking through this 50. It's had enough attempts at it, it's got to be breaking above it. Now we've seen it run into its monthly pivot and pull back off. On the shorter time frames, of course, that would give it the sort of signs that well, it might be over. It's given that sort of pivot swing sort of pattern and looking soft. However, whilst looking at here, one of the reasons I'm sort of quite happy to answer this question is because we have seen a form of well, we've seen the higher low come through here. So this being a higher low as it broke the highs there, so it's given us a higher low. Providing it stays around about where it is, it could come off a little bit more, but if it breaks this area here, well, then it will give us a secondary higher low, and or even a third higher low, because there was a slight higher low triggered here, so it would be even a third higher low in that case, but it would give us the potential for the break. On the bigger time frames is really what I'm looking at this from, and above that 50, it will have also by that stage broken this trend line as well, giving us the higher lows. We've seen a sort of, as I said, the higher low there. It could be on for something more, and that's the question. Fundamentally then, there was quite a change in the ECB's rhetoric. Quite well pointed out was the fact of what's driving the inflation at the moment, and it's all about supply and demand is drives inflation. If you've got too much demand and not enough supply, it pushes the prices up and off it goes. However, and that's a bit like what we're seeing with US inflation. It's a demand driven. So by hiking up interest rates, you might slow some of that demand down and off it goes. Now, if the equilibrium of demand isn't really increasing, but the supply is either a short supply or the price is going up, as in the case of energy, then it's a supply-driven inflation, and this is what we're seeing in Europe more than anything else, is where the energy prices are hitting hardest, and so it's a supply. There's not been a great increase in demand, where there is in the smaller pocket of supply that's available, I guess. So that there you are, that there is more demand in the smaller pocket of availability. But for now, it's a different type of inflation that's driven there. So it's not driven on more consumery sort of based inflation, where there's higher wages and then more spending, etc., which is driving and is more aligned to what's happening in the sort of US side of things. It's more aligned to what's obviously happening with the Ukraine war, etc. So has things changed? Well, the fact that the ECB have realised that they've got to increase rates further yet, and they've clearly marked that out. Okay, they're not going to increase them massively beyond a certain level, and they've given they sort of flagged the sort of time period it might come out. It's been the most hawkish they've been, and the clearest I think they've been. And listening to the speech last week, it certainly seemed a little bit more straightforward and leading the way in terms of what's been expected. Now, that supply side of things isn't likely to change too much too soon. In fact, the cost of supplies could be going up higher depending on what can be put in place. But if anything, the inflation is still there and will be driven. On the other hand, we're looking at this as the euro dollar and looking at the US dollars aspect of this. Well, some of the growth factors are falling down in the US, so there is potential for the US figures to fall a little bit and maybe surprise things. So we, as I say, at the moment, technically, I would suggest that in answer to the question, if it can break and close above that daily 50 MA, the daily pivot, etc., yes, we should be looking on the long side. Otherwise, well, the trend is very much to the downside. If you start breaking down the low of the candle from last Friday there, that really puts things into a softer sort of potential, and we could see further lows. As I've already pointed out, there's lows way further down there. So there you go. Hopefully that's answered the question. In my book, I think there's fundamental reasons why it may be a little bit better. We can also look, I guess, at the sentiment, and that showed a little bit of a change last week. I can't actually bring it in. Let me just take this drawing away. I can bring it in to show you. And the sentiment changed a little bit. Asset managers' money there. Shorts were reduced somewhat, and so we've seen some longs. Now that was dated last Tuesday. That was before the ECB announcement. But so the bigger money, okay, bigger scale, it's still bullish. 384,000 contracts versus 195. So that said that 190. Well, the short positions had been creeping up and creeping up. Here we're seeing a sort of a move, a slightly more bullish. Now that's not a timing tool by any sense. We've got to look at the technicals down here and see what's happening. But what it may just say is, well, actually, perhaps even the bigger money is suggesting, thinking that there could be some more upside. Okay, I will leave it there. I hope you found this useful. If you do, please give me a thumbs up, and also subscribe if you haven't already done so. Take care. Have a great week ahead. Bye for now.